Hello, everybody. Jerry DeMaio from Family First Funding and MortgageZoom.com. And the topic for today is the weekly mortgage rate update for 1/27/2023. And we had another sideways week for mortgage rates. What do I mean by sideways? What I mean by sideways, they haven't gone up, they haven't gone down, they've stayed in this same range. We've been trading really in the last 2 weeks. We saw lows of like 5.75 briefly one day, and we saw highs of 6.25, and we've been trading somewhere in that range basically for the last 2 weeks. But that's good news. We're well away from the 7% rates that we saw, back in October. So that's good news for home buying, good news for mortgage rates. Today we had another inflation report come in, one of the reports the Fed watches closely. And again, we saw inflation month over month going down. A major part of the inflation number coming down is also the transportation costs. The energy prices are down, so it's helping with inflation numbers. We're also seeing the consumers spend a little bit less, also good for inflation. Now, I'm also going to ask, please, hey, if you haven't subscribed, please subscribe to the channel, and please don't forget to like this video. And I'm going to go to the videotape right now. I'm going to bring on Dan Habib and Barry Habib, and they're going to get some home sale reports. They're going to review the home sale reports, and then Barry's going to be a little technical with mortgage-backed securities and the 10-year treasury. A little bit technical, but I have some technical geeks that watch every week, and I think it's important. And if you watch week over week, you'll get to know and understand this information a little bit better. So with that, let's go.
I'll tell you another fresh, clean piece that we saw today was the pending home sales report. So this is signed contracts on existing homes, the counterpart to the new home sales report that we got yesterday on the new home market. And in the month of December, it was up 2.5%. Now, this was better than estimates out there looking for a flat-ish number. But if you take a look at the November reading, that was also revised higher. Initially down 2.5%, got revised to down 1.4%. So if you were to go ahead and take a look at the original number we got for November and compare it to this number for December, home sales are actually up 4%. So just like we've seen mortgage apps turn the corner and start to go higher over the last several weeks, we saw new home sales showing a slow gain. Well, here we are now with pending home sales starting to move higher. Not only is the peak in inflation reached, I think the bottom in home sales has been reached. Now, if we take a look at year over year, it was down 33%. Now, we did eat into the negative 38% in the previous report, but clearly some more room to go to get to more normal levels. But I think things will be better from here. We ain't seen nothing yet as rates continue to come down.
Yeah, Dan, and add to that the home buying season. Remember, this number is for December, not exactly a big month to buy homes. So yeah, you're right. Things are going to get better here. And I want to show you the charts, folks, because we're down 5, as I mentioned. The 10-year treasury disproportionately worse. We'll take a look at both. But as we look at mortgage bonds, we're in this trading range. We remain here. So we've got double protection here, 25-day and 50-day moving average. Now, it looks small here, but you could get whipsawed in here. It's a range between the two of 101.07, let's call it, and 101.67. So this little band here is 60 basis points. So as I mentioned, you could get whipsawed, it could get tricky, but it does look like it's heading sideways. Now, looks like we survived the inflation number. We didn't get the boost we were hoping for, but now let's turn to the 10-year treasury and see what clues we can garner from there. Also within a similar trading range. Now, the bad news here is that the 10-year treasury could move up from its current level, it's called 354, towards this multiple layer ceiling. Now, that's good news because that gives us protection, but it is about 6 or 7 basis points worse than where we are at the present time. So it could get a little rocky, but I'd like us to stay floating here because we do have multiple layers of protection to the upside in yield and to the downside in mortgage-backed security prices. Have a great weekend, everybody. Bye-bye.
So thank you, Dan and Barry from MBS Highway. And so right now, mortgage rates are stable. We're again in the high fives, low six range right now. That's good news, much better than we were. We're not seeing tons of volatility right now. Also good news. If you'd like to have a one-on-one appointment, we can go over the scenario for you and your family. There may be some options. There are some really good programs still out there that may help you and your family make a home more affordable. But what you need to do is go to www.mortgage-zoom.com and you can have a one-on-one appointment with me, Jerry DeMaio, just like this. And we can see if you're eligible for a grant. We can see if an ARM is the best product for you. We can see if maybe a 2-1 buy down is an option for you. There are lots of options that we can look at, but the only way we know is if we have like a serious one-on-one conversation and we can find out what works best for you and your family. I'd like to thank you again for joining. Please don't forget to subscribe. Don't forget to like this video, and we'll see you all next week. Thank you, everybody. Have a great weekend.